Hello everyone, and welcome to this afternoon's webinar, or at least it's afternoon here for us here in the UK, but I think I know a lot of you are joining us from the United States, so a good morning to you. But wherever you are in the world, you are very welcome to join us this afternoon. As always, before we start, may I draw your attention to the disclaimer, which I believe you can see on your screen. As you know, trading can be extremely risky, an extremely risky business. So please don't ever think of using money that you cannot afford to lose. This morning we did have some issues with audio, but I've checked mine with David. David's checked mine with me, and we think we're okay. I'm going to say this. Someone could say, "Oh, fantastic! Thank you very much, David." But you know what I mean? You say, "Can you hear me?" at the back, and they clearly can't. And it always sounds a bit silly question to ask in many ways, isn't it? Anyway. Thanks for coming along. Very quickly, in case you've not been with us before, here we are. There's me, that's David, and we're going to be looking at, in fact, we're going to extend it slightly today. We've got some Forex as well as the indices. We're also going to have a look at a very particular stock, which I literally just caught the headline over at Forex Live. Apparently Warren's taking a bit of a bath on it. It's the Kraft Heinz stock. I'm going to look at it through the prism of volume price analysis, which is what we do with all the charts that we consider. In some ways, you know, what we actually look at, the ticker that's on the left hand side, whether it's a currency pair, whether it's gold, whether it's oils, whether it's a stock, whether it's an ETF, it's almost irrelevant, because you can apply VPA to any chart and any time frame, as long as you have obviously the price action and you have some volume recorded. And in the spot forex market, the tick volume that is delivered by your broker takes it from a sort of central pool of liquidity providers, is actually, it's not 100%, it's not like actual volume like stocks and futures, but it is good enough to to come up with an analysis of not just what is happening now, not just what has happened, but what is likely to be happening next, which is awfully important. And we look at the charts through the prism of VPA, supported by our quantum trading tools. And I know we also have a lot of our users coming along to this room just to see what's going on with the tools, how we use them. And by the way, if you've got any questions on anything we say, VPA related, software related, please don't hold back. Just pop it into the chat box, and we'll share the answer with everyone else that's on the call. Volume price analysis, in case you have not come across it before, this is the book that sort of started it all, certainly for David and I. It's up on Amazon. Actually, it's got more than 280 now. How has it got now? 100. Oh, I don't know. We'll have to update that. And so it's not a new methodology. Looking at a chart using price and volume, Jesse Livermore used price and volume. Who else was it? Just think of one of the great traders of the past, Wyckoff, Richard Ney, you name it. The great iconic traders of the past would always look at the relationship between what is happening in terms of price action and the volume, to see basically whether the move that you are seeing unfolding before you is authentic or not. Now, what we've done is we've taken that premise. There's a lot of Wyckoff in the book, there's Wyckoff's 3 laws, and we have kind of added our own spin on it, in the sense that we use candles, we use candle patterns, we have support and resistance, although support and resistance has always been important, and we've actually developed some particular volume-based indicators to support the methodology. But if you haven't come across it before, it's up there on Amazon. And what we've also done is to support the book. There is now a book which with over 200 worked examples of the methodology in all time frames. This is the one that covers primarily stocks, indices and commodities, but there is also a Forex version for VPA, and on the Forex side there are also books that cover the broader markets, the fundamental side and what we call the relational side, because as traders It doesn't matter what you trade, whether it's Forex, whether you're a commodities trader, whether you're an index trader, or even, you know, you're in stocks. You really have to be aware of not only the business cycle, the economic cycle, what are the fundamental news releases that are being, you know, that are coming on board. Who are the central banks? There's always dots in the markets. There's the 4 capital markets, and you know, you have to learn to join them up in the right way, and that's what we've tried to do with all the books. And increasingly these days, of course, you've got the political angle as well, and of course you've always got Donald's Twitter feed, who has really unleashed a market storm, or unleashed it last week. As we all know, price action has been absolutely phenomenal over the last few days. I tell you, back in the day, August was, you know, put your feet up and you know, have a cup of tea and trying to make some pips in quite sluggish markets, but certainly not anymore. With regard to the indicators, they are from quantumtrading.com. We've developed them, as I said, for all the markets. Forex, you can use them, you can apply them in all time frames and across all instruments. The ones we're going to be looking at here in particular, apart from the standard set, is we're going to look at some non-time based charts and the indicators that go with them, the tick and the Renko. At remember it's actually quantumtrading.com. Here we are. This is actually the tool set for NinjaTrader. This is the complete package. It's what we call the essentials. It's everything apart from the Forex specific ones, and you can buy the full package, or you can actually buy them individually, or we have little bundles as well, and everything is on the site at quantumtrading.com. If you buy anything from us and you want to upgrade, you want to add more, you want to upgrade to a full package, you will always be credited. But whatever you buy from us, whether it's the tools, we also have an education program for Forex, everything is covered by our 7-day money-back guarantee. Oh, here we are. This is the slide I was looking for. Quantumtrading.com is where you can find the details of all the indicators. And I think, oh, there's me. Here we are. AnnaCooling.com. Details of all the books, as you see here, that are up on Amazon. There's even one on binary options. And even if you've never thought about binary options as something to trade, this book covers a lot about options which are applicable to index options, equity options, and what's also important, there's a very, very big chapter on volatility, which we have been told by people in the industry is one of the best that they've actually come across, in the way that we explain volatility and what it can do for you, and how it can also cause you a huge amount of damage. So AnnaCooling.com is where you will find all that information and my analysis on stocks, commodities, and the feed goes through from the various Facebook pages. Anything you want to add to that, darling? Are you okay? No. Right. Okay, what have we got here? Now, just a quick from this morning, because as I said, this is one of the specific indicators that we have for Forex. And I know even you say, well, I'm not interested in Forex, I'm just an index trader, why should I have a look at seeing what the currencies are doing? Well, part of the reason why the indices and markets are generally in a much more positive mood today is because of some news that came out overnight to do with China. One of their trade releases came in well, better than expected. Put it this way, it wasn't as bad as they thought it would be. So what that has happened is this blue line here represents the Aussie dollar. The Aussie dollar is a commodity dollar because Australia is a huge exporter of iron ore. China is their biggest customer, basically. So what happens is the market then looks for sentiment. It looks for these clues across the markets to try and reassure itself that everything is fine, everything is on the up, as it were. So China comes out with a good piece of news. The Australian dollar gets bought, and the sun shines, and indices and equities start rising. Now, of course, as traders, what we have to do, we also look at the VIX. Here we are, the S&P 500 VIX. That is a global barometer, although it's to do with the S&P 500. Every trader on the planet should consult the VIX, because if the VIX is rising, then things aren't, the market's not very happy. So everyone looks at the VIX. But what's interesting is with this whole thing about China and the exchange rate, the dollar renminbi exchange rate, and what's called the yuan fix. China has always managed the exchange rate. And what it did was, after Donald imposed these additional tariffs to run from the 1st of September, they then decided, right, well, we're going to weaken their currency. And what that means is, obviously, their goods become cheaper, because if you're exporting something and and the country you're going to export it to is going to put an extra cost on it in the term of a tariff, so what you do is then you make your goods cheaper by manipulating the exchange rate. And this really is what first you had Donald, then you had the retaliation through the forex markets by the Chinese, and now, if you like, we have another measure of risk. So this Stephen Innes here, he writes for investing.com. I would take issue with him saying forget the VIX. I think you forget the VIX, or you ignore the VIX at your peril. But what's interesting, what he says, is about the yuan fix. There's a whole backstory to the, as I said, the dollar renminbi exchange rate. I think perhaps I'll write about it and do a little summary of it. It's more complicated than it's perhaps explained in the media. But what you have to understand is, it's explained to you earlier, you may just be focusing on taking some pips out of points out of the Dow. There's all this stuff going on around you, including what's going on in the forex market. You have to be aware, as I said, of what is going on. So this morning, this is this morning's in this morning session, the London Open, this is what we were facing. This is our currency strength indicator, which really tells us the performance of an individual currency. This is the hour one, and these great big looping moves that we see here in the currencies represents, we've had some phenomenal moves in some of the pairs. I mean, you've had phenomenal moves in the indices, but I mean, truly in pairs, I mean, hundreds of pips worth. And you're on the right side. You've been cleaning up in the last few days. Then what happens? Obviously, everything calms down. The markets can't carry on at the tempo that we've had over the last a few days. We'd all be exhausted apart from anything else. But and then what happens on the CSI, what the currency strength indicator tells us, it not only tells us what's happening at the moment, whether something's being bought or sold. This is the British pound back on a big sell, and obviously there's buy on the Aussie, the reasons for which I have given you. But what the indicator also tells you is, when you have this sort of this situation here, this picture where all the currencies are kind of all intertwined, and that tells us that the really, apart from the Aussie and the pound, everything is kind of, perhaps moving sideways. This is a very important pair, the Japanese yen and the US dollar. The lines are moving together, so they're in congestion. So you will probably not be looking at that pair at the moment. This is the hourly chart. Now, how does that translate to the actual chart itself? Well, this is my profile based on MT5. This is how I trade the faster timeframes. As I said, a non-time based. This is a Renko chart. A Renko chart is fantastic because it really gives you a real insight into how price action works. Price spends an awful long time in sideways movement, in being range bound, as we can see here, and it's all stripped of all the noise that we have on either a bar chart or a candlestick chart. Then we have a divergence, we have a move away. This was the beginning of the move lower, as I said, that we can actually see here, Aussie going up, pound going down. Then we have this, and it starts to gallop, and like all price action, nothing goes up and down in a straight line. It goes down, then it consolidates for a bit. We know it's in consolidation because it's clearly, we can see it's moving sideways. Trend monitor is still bright red. The trend dots that we have here, which we use on all the other instruments and charts as well, not just in Forex, we can see here we did have a transition into grey. We have three colors. We have obviously the blue, the red, and we have this intermediate color. There was actually quite a bit of a pullback there, but the trend dots, you know, that went back into red. This has also stayed red, a bit more sideways. We've got pivots to the top, pivots at the bottom. I've also got fractals here at the moment. And then the move really, you know, picked up a reasonable amount of momentum. We had another another sharp fall, a little bit more of sideways movement, and then down. Now, what this also tells us is in this kind of move is if you take this to be the primary trend, well, this little bit here is like a secondary micro trend, an attempt to rally. And if you had missed this bit, looking at the time chart, you could possibly use this using support and resistance as well as a potential re-entry or the possibility of adding to your position. So hopefully, if you've caught that bit, then you can see it's moving sideways. It looks like it's pulling back, not sufficient for perhaps to close out. But had you missed that, you then see this consolidation. Then it moves away, a break of the of that support, the support under these lows here. Then could you be confident in taking a position? Yes, well, certainly if you had the CSI as well, the CSI would also help you at the same time. It is still going lower. Then we've had another, if you like, ledge, if you like, on this move lower. Now, how that translates onto the chart itself this morning. This is, you know, I said everything was kind of congesting. This is the volume point of control, which you'll also see on the charts that David has on Ninja. And this is a really, really important indicator because it marks that place on the chart where volume and price, the transacted volume is at its deepest, at its greatest over the longest period of time. It's also, and it helps us to explain Richard Wyckoff's second law of cause and effect, because the longer a market is in congestion, and this is the 30-minute chart, this is back to 7th of August, as we see here. You've got to take 2 hours off that. That's about 8 o'clock in the evening. This pair just went into consolidation. This is the 30-minute chart. Then we have the breakaway, and we can see here falling prices, lots of volume coming in. But this morning, it was, you know, it was still around this bit here. Was it going to go up? Was it going to go down? You know, it did take a little bit of time. So when you see a chart, mine is the 30 minutes, what I call my benchmark chart, because I actually take my positions off the 3-minute chart, and I look at the 30. Let's have a look at the 3-minute up here. And also use the, as I said, the Renko as well. Okay, let's move that over. Where is it here? All right. Okay, this is the 8th, this is the afternoon. So we can see here these congestion phases that we saw on the Renko. This is dynamic. So every time one of these areas builds up, it's volume and price over time. At one point it would have been here, and at one point it would have been there. Why? Because I can see the little bulges here, and I can see the sideways movement moving there. And as I said earlier, when you look at the Renko, this is when the move actually started. We can see here nice deep red on the trend monitor. And is this ready to move even lower? Well, there's a little bit of a pullback at the moment on the 3-minute chart, but certainly there would potentially for another entry point here once it broke down from the volume point of control. But this is quite interesting here. You know, I said about this is the primary trend lower. A little bit of volatility. Trends come in all sorts of flavors. They're not nice and smooth. The Renko smooths them out. We know there's volatility because we've got the volatility indicator there. It came down here. Then it had this attempt to rally, and this is where VPA comes in, because we have a ton of volume under the down candles. Then we have this attempt to rise, but look at the volume. You've got 3 candles and volume falling. So what does that tell you? It tells you that this is not going to go very far. And the next candle also, you have a reasonable amount of volume on a little sort of little shooting star at the top of this little pullback correction, secondary trend, if you like. Then it carried on lower. Now we're once again back into a congestion phase. Let's have a look. How does that equate to what we see on the Renko? The Renko's picking up the congestion phase as well. I've got the 6-minute here. That's also in congestion. And let's have a look at the 30-minute. This has had a really good run, this pair, and we also on the 30th? Well, we've had a little bit of buying coming under here. The candles are moving down. Volume seems to be falling away. Don't know what's going to happen. You know, maybe this pair has had enough for the rest of the day. But this is how you combine non-time based chart, multiple time frames, looking at our indicators that we've developed for volume, price, and time, and then applying what we call VPA 101. Yes, David? Anybody else? Is there anything you want to add to that, dear? There's nothing I can add. I think he's been scribbling away because it has to go onto the recording, which goes up on YouTube. So what's going to happen? I'm going to leave the Forex for the time being, as I said, because there's an awful lot going on over on the other side, and we're going to have a look. We're going to have a look at craft, David, are we, later on? Yeah, we'll have a look at craft, because it's always nice to know that we can't always be right. Warren apparently has had a bit of a bad day today. He owns 27% of Kraft Heinz, 325.4 million shares. He's spent 9.8 billion. This is what the chart looks like. That's not a happy chart. So we're going to have a look at it from the perspective of volume price analysis. I'm just going to pass over to David.
Thank you, darling, and a very warm welcome to you. Good to have you with us today. I'm just going to move my chat down out of the way. There we go. I've got the. I will go and look at that particular stock in a minute, because it's certainly one I wouldn't buy. But there we are. Perhaps he knows something I don't. They bought at the top. Oh right, okay. Fair enough. Oh well. We all make mistakes. His are just bigger than everybody else's. But then so's his bank account, so it probably doesn't matter very much. We're on the ES. I've got the ES running. I've got the 15-second up here, so very quick over on the left-hand side. I've got the 3-minute and the 5-minute, and I'm just keeping an eye on this because I've been having issues with the data feed, and it looks as though it's frozen again. Hold on one moment. Bear with me a minute.
You've just been looking at my screen at the moment. We're just trying to sort out what's happening with David's system, and we'll be with you in literally as quickly as we can.
Just getting the screens back up again. Apologies. It's been happening all day. I have no idea why feed just freezes. Right, I think I'm okay again now. I'll just keep an eye on it. Yeah, I'm back. Okay, do you want to switch screens? Yeah. Just going to switch back onto the Ninja again. Apologies. There we go. Should be coming up any minute now. Yeah. There we go. Sorry. Right, back on the ES. Top line, I've got the 15-second, 3-minute, and 5-minute. Down at the bottom, I've got 10, 15, and over onto the daily. And perhaps if I can just start with the daily, I'm just going to pull this up a little bit out of the corner there and put it up full size. There we go. Huge amount of volatility over the last week or so. Massive amount of volume. a lot of buying on this particular day and further buying on this particular day. And what we're seeing today is really a reinforcement of that buying. So there's been buying over 2 days now, and we're starting to see the market trying to rally. It's not rallying particularly strongly, but then it's against the backdrop of not only a technical picture, but also the fundamental picture. So as always, I would urge you to keep an eye on the daily chart. It just gives you perspective. It gives you insights into the volume price relationship, what may or may not happen. Since we've been on air, since Anna was talking, it's been ticking up. There's been a handful of points come in, which is perfectly fine. If you think this isn't very many points, you think, well, 2, 3, 4 points isn't very much. Just bear in mind that on the ES, it's $50 a point. And most traders who are trading this index will probably look to take something in the region. If they're having a good day, they'll look at taking 4 big points, which is basically 16 ticks. That's the kind of metric that they'll tend to use. Very different if you're looking at the YM, for example, or the NQ, but that's basically the way they look at the ES typically as an intraday trader. So this is decent points we're making at the moment. Trend monitor is blue, trend monitor's blue, trend monitor's blue, trend monitor's blue. So it's all looking fine in terms of the volume profiles, nothing particularly scary at the moment. Ticking up nicely. Let's go down to 15. Just coming up to a low volume node here on 15. The drop off in volume is something you have to live with when you're trading these indices, because this is through our time, this is London and Europe. And then we come to the US session. This is trading purely on Globex. And I've said it many times before, it's absolutely nothing wrong with trading on Globex. Indeed, in many ways, there is an advantage in that you're avoiding the volatility that comes with all the EA systems that then open up particularly on this particular index. So there's always a huge amount of volatility, and that's primarily the reason why. You then see the surge in volume as the cash markets open alongside Globex, the electronic, and then this volume falls away. That's a natural decline in volume purely because you get this big surge around the open. So it's just bearing that in mind as you read the charts going forward. Still moving up nicely for the time being. And the reason that we're moving up nicely, as Anna highlighted on the CSI and obviously in the Forex world, we're seeing some pretty decent buying of the Aussie. There's been a massive sell of the Aussie over the last few days, and that's been reflected in huge selling of indices because of the risk relationship. Now we're starting to see buying coming into the Aussie. We're even seeing buying coming into New Zealand as a carry on from that particular sentiment. The two will often go hand in hand. The massive plunge in the New Zealand dollar influenced the Aussie dollar, not to such a great extent, but it certainly influenced it to a large extent, and that pulled the Aussie down purely based on the fact they are close trading partners and they're obviously close geographically as well. So the reason we're seeing this at the moment, or you can argue it both ways, you can say, well, risk sentiment in Forex is driving this, or this is driving the Forex market. It doesn't really matter which way you look at it, as long as you understand the relationship. And certainly seeing yen selling at the moment, certainly Aussie buying, and it's reflecting the fact that the market is now ticking up. In terms of the other indices, let's just go and have a quick look at those, see if they're doing the same sort of thing. If you're an index trader, and I've said it again many times, please have all 3 indices up. This is the YM on the left. This is the futures contract for the Dow 30. The one in the middle is the NQ. This is for the NASDAQ 100. So that's the futures contract there, the NQ. And over on the right here, we have the ES, which is the futures contract for S&P 500. So 5-minute time frames at the top and daily charts down at the bottom. Daily charts are pretty much the same. The reason I went for the ES rather than the NQ is it's got a little bit more momentum in it at the moment, similar to the NQ. YM's a bit laggy at the moment, but they're all moving in the same general direction. Perhaps the major difference is that the NQ on the daily is way off the VPOT, which is this yellow line here. So it's got some way to go before it runs into major resistance or congestion, which you can expect at 7,800. Whereas the YM is now trying to pull away from its volume point of control, as indeed is the ES. So in terms of targets, if you will, and where this market's likely to travel to, if the assumption is that we like to see this track up to the VPOC, then in terms of these two on the outsides, they are going to be tracking further away from their own volume point of control, which if you're trading long is probably a good thing to see. It also gives you a heads up in a loose arrangement, I would say, that once this arrives at the volume point of control on this particular chart, it wouldn't be a surprise to see these indices also move into congestion. And it's part of just considering other relationships, which then try to give you a perspective on what it is you're doing in your particular market or your particular instrument. Okay, it's not moving dramatically higher, but we're still trading higher. Let's go back onto the time-based charts. I'll go over to the tick as well. There we go. Coming to a little bit of a pause point. I like to have this 15-second chart purely for speed. You might find it scary. Actually, I won't pop it up full size. Let's just pull that over there. There we go. You might find it a bit scary, but it just gives you a visual of what's coming up very quickly. If you're on a 1-minute chart or a 2-minute chart, just gives you a sense of the buying and selling pressures that are dictating. You've got the volume point of control here in exactly the same way as you would have on any other chart. You've got your volume histogram here, which is giving you your high volume nodes and your low volume nodes. And you've also got all the support and resistance levels up and down the chart. These are the accumulation distribution indicator. And they work in exactly the same way on this chart. And it's just reading it pretty quick in terms of the volume price relationship. Just in congestion at the moment. Got a decent platform of support in here at 29.11. We've obviously got the volume point of control here, so we're looking for congestion around this region. We've got a decent platform here, as I say, to help to push the market higher. We've got a low volume node here at the moment and very low volume up towards 13.5. So if we can break away from here and get up to this level, then we should move through there pretty rapidly. Hold on a moment. Apologies, just had a frog in my throat. And the trend monitor will, of course, change very quickly on that particular time frame. It will be the first to change here. And if this is going to develop into anything more meaningful, then ultimately what will happen on this particular chart is this will start to transition. We might get a darker red coming along. We might go into a darker blue before we go into darker red, whatever it may be. But this will always change at a much slower pace than over here, because this is fast. This is going to change much more quickly, much more rapidly, but it works in exactly the same way. It's just looking at the trend and it's trying to identify whether that trend is a true change or whether it's just simply a pause point. And if it's simply a pause point on a 15-second chart, then it's not going to be reflected over into a 3-minute time frame. It's just going to flip-flop around. It'll come back out into blue if we're going to carry on blue higher. And these guys will not change at all. There'll be no flicker at all on these particular time frames, which looks to be the case. Okay, let's have a look. There we go. We're starting to transition back into bullish. We can see the trend line starting to rise nicely now. Nice fat candle with a nice wide candle with just a little wick at the bottom, nothing at the top. So no selling pressure on that one and good volume supporting it. So that's nice and clean. Coming up to this low volume area. Trend line has started to kick up, reflect that fact. And as I said, the trend monitor hasn't changed at all on the other two, and it's what you would expect because it's just held. Wasn't here long enough to reflect any change. We just had a single down candle. Volume was okay under that one, nothing particularly scary, wasn't signaling heavy selling coming in. Just bear with me a moment. Sorry, Anna's just highlighted. I've got a question in the chat box. Apologies. I have the I always have the chat box closed when I'm in full flow. So many apologies. I'm not ignoring your question. I'm just focusing on what I'm doing on the chart. So please bear with me. Linton, hey guys, any chance you could speak for 2 minutes on the volume histogram? I think you said it was called the shady. Right. Okay. No problem at all, Linton. I'll do it as I'm going along anyway, but let's just pull up. Let's put this one up. Let's just pull that. I won't pull it up full size. Gosh, trying to drag that corner out. Go away. There we go. What's the one? There we go. Right, let's just go on to the 3-minute for a moment. The volume histogram here is really, it's an expression of volume, price, and time. The relationship here is linear. It's volume and price. So you're looking at the price, you're looking at the volume. That candle that's just formed, for example, nice little candle, little wick to the underside, good volume, it's what we expect to see. This attenuation in volume is what we've expected to see, and now we're getting into the session, and we can really say, well, this is the surge, and now we're looking at comparison. So this looks fine, absolutely nothing, there's no selling in there, that's just straightforward buying, nice flat top to it, and a little wick to the underside. So that's the volume price relationship vertically, linear if you will, and what the volume point of control does, it swings that relationship round onto this axis, the y-axis, and introduces the concept of time. Because the longer price sits in a region, then the greater is going to be the concentration of volume in that particular area. The heaviest is always around the volume point of control, which was the pivot point here. This was the fulcrum of the market, it's the point at which the market paused the longest, builds up this big volume concentration, and basically at that point the market is in agreement. There is no bias one way or the other, there's no bullish or bearish bias. The market is sitting there, you can imagine it as a seesaw, two people of equal weight on either side, and it's just sat there motionless almost. There's nothing really to swing it one way or the other. As soon as someone sits on one side or the other, bang, the market starts to move, and that's really the principle of it. And all this histogram does on the right-hand side is it presents that data to you in terms of where you've got high volumes and low volumes. And the important point is this, that as a trader, you want to know what's going to happen next. You don't want to know what happened last week or yesterday. You want to identify what is going on at the live edge of the market and where the market is like to go next. And more in particular, what is going to cause a problem to that market moving in that particular direction. So when you approach these low volume areas, for example, as indeed we're doing here, we've seen the volume falling away here, we're coming up to another low volume region. And of course, that's on a 3-minute. You want to find out where we are on a 5-minute, 10-minute, 15-minute, whatever it is, and see what's in the way. But essentially, as you come up to a low volume area, you expect the market to move through there fairly rapidly because there's nothing from a volume price time perspective, in other words, a congestion area based on volume, to hinder progress of the market higher. It's exactly the same principle as support and resistance from a price-based perspective. You know, these levels here are based on price. This is on the accumulation distribution indicator, but it works exactly the same way as on the MT4 and MT5 support and resistance indicator. The stronger these levels, and these are very, very strong, and we've got a cluster of them here, we've got 2 of them. So if the market were to collapse, this would be a very strong area of price-based support, which to be penetrated would require a lot of volume, but which may well act as a platform. So that's based on price. This is all based on volume. So the volume histogram gives you the same information but from a volume perspective. In other words, the congestion volumes that sit in these regions up and down the chart. So I hope that answers that one for you. Let's just pop that back into there. There we go. Ticking along nicely, we're up to 16. So, you know, nice little points here. Remember, each of these points is worth having. $50. Not bad for a few minutes work. Painful if you're on the wrong side, of course, as always. Off we go. I'm going to have another leg up. Let's go up to, yeah, that's fine. That's okay. Let's just pop this up full size. There we go. Watch it in real time. There we are. Nice volume under that last candle. Nice spread, no wicks. Looks fine. Good volume to that. You know, absolutely fine. And as I said earlier, this is low volume up here. So there's not much to hinder progress right now. On we go. Trend minus is nice and blue. Trend line's rising nicely. Pulling well away from the midpoint here at 0. All good. Don't like the look of that much. Big spike in volume. Narrow spread candle. Little wicks top and bottom. Bit of a doji candle. Bit of a pause point coming up. Heaviest volume so far. Well, not quite. That one's a bit bigger. But certainly these two guys, you know. And for comparison, this is what it's all about. It's finding your benchmark candles. This is a 15-second chart. It makes no difference as long as you're comparing like with like, as long as you're in the same session and you're comparing the price action in that session. This guy here, fine, absolutely fine, decent candle, little wicks, fine. That's your benchmark, because when you look at this volume here, you've got half that spread and you've got little wicks top and bottom. So, you know, this should be much wider. This should be something like this, maybe with a flat top. So the expectation is right now the market's going to pull back, which is exactly what it's doing. It's what you expect it to do. And that's what VPA does for you. It gives you the confidence to understand why the market is doing what it's doing and not panic and go, oh my God, you know, I had $250 and suddenly I've only got $150. What do I do? Panic, panic, sell, sell, sell. It removes that emotion from your trading. I can't stress it too strongly. Yes, it is about getting in, but it's also about staying in, because once you're in, you have to stay in to maximize whatever it is the market's going to deliver. And every single market will go up, pull back, go up, pull back, or the reverse and the downwards trend. And it's just getting through those phases of price action where the market is pulling against you and having the confidence to hold a position and stay in. And that's what the trend monitor has been designed to do, not solely as a single entity, but more particularly when you use it in combination in multiple time frames. As Anne said, the Renko is also fantastic at this. Let's just pull up the non-time based very quickly. Let's go over onto the Renko. I've got the ES on here. This is the Renko running on the ES. I've got the trend dots here. The trend dots work very close to the price action. See how they support the price action? They're below at the moment, pushing, 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 supporting, helping to keep the move going. Trend monitor works in exactly the same way. And you've also got the support and resistance from the accumulation distribution indicator here as well, working in exactly the same way. All works exactly the same. And using time-based charts with non-time-based is just a terrific way to smooth out the pause points and all the rest of it that you see on time-based charts. Just head over to the tick charts. Again, these are non-time based. Tick charts have no time aspect to them. This is on the ES I've got set up here again. Where are we running at the moment? We've got 1597, 6000, 6000. So, you know, these are what I would expect to see on the ES. It's very heavily traded. If I change this to the YM or the NQ, these numbers would be down in the hundreds or low thousands. This is the heaviest trader, and you can even see 20,000 ticks on this sometimes when it's really, really fast moving. But the beauty of a tick chart is, I'll just change these around, just get them set to the right speed because these are way off at the moment. 1597. Very easy on Ninja. Just click it, click the number with a T on the end of it. There we go. Do that one. Leave that one up there because that's the same. So we're now running on a 6765 tick. Every time 6,765 ticks go through the market, then the candle's created, irrespective of time. And that's the beauty of it, because you see momentum. You'll see raw momentum revealed in this particular market on a non-time-based chart. And what the tick speedometer does over here, this is a 1 minute, a 3 minute, and a 5 minute. What it's doing is it's delivering the optimal tick setting for the tick chart, because otherwise you have to guess. There's so many traders out there trading tick charts. They just guess because they haven't got a clue what the tick speed should be. There's traders out there trading the ES on 200 ticks. It's ridiculous. And the other thing about it is the tick speed changes throughout the session. The reason there are two numbers here is because this changes very quickly, as you can see. It's moving around all over the place. What this number does is we've just configured it in such a way that this delivers a more stable number, which is close to the actual. You can use either. You can use the actual or the closest to it. When I'm trading the just Globex on its own, I'll use the actual, this number here. If I'm trading on both markets running in parallel as of now, then I'd be using this number here, because it just means I have to change the chart settings less frequently. Just go back on the time-based charts again. There we go. Let's pop that up full size. That was what set the alarm bells ringing. I didn't like it. I saw it come in, bang. You know what's happening? The market's sold off. Hasn't sold off strongly. Or this is only 2-3 points, but they may well be enough to take you out of the market. So as soon as you see these signals, it tells you what is going to happen next. You still have a decision to make. And that will partially depend on how long you're proposing to sit in this market. You may be sitting in here for hours or days or seconds or whatever it is. But as soon as you see these signals, they give you clues. I mean, you've got even more clues here. You can see it here. You've got wick here, good volume under there, heavy selling under there. Now what we're seeing under here, we're back at the volume point of control. What are we seeing? we're seeing a fall off in the selling pressure. Why? Because you've got a market that's basically trying to fall, but it's falling on low volume, or declining volume rather. So the selling pressure is diminishing. And just remember this, that for a market to rise or fall takes volume, takes effort. We're all familiar with gravity. We know it takes effort to get something off the ground, but the same applies in the market to a falling market. It takes effort, it takes volume. If you haven't got volume in a falling market, it ain't going to go far. It's going to pause, or it's going to go into congestion. The trend monitor you can see is transition. We've gone through the full spectrum here. We've now gone from bright blue, dark red, out the other side into bright red. That is the typical sequence. Doesn't always follow that pattern, but that's the way it's been designed to behave. Occasionally you get transitions from maybe a dark blue go straight up the other side into dark red, or maybe you miss the dark blue go into dark red and bright red. Very occasionally you'll see it go straight from bright to bright in dramatic moves, but generally speaking, this is what you expect to see. We're now in congestion. Why are we in congestion? Because we're at the volume point of control. We've got pivot low, pivot high. To see how volume shapes up on this particular candle. Interesting to see. We get decent volume under it. Yep, tons of selling under that one. Here we go, nice rise in volume. So lots of selling, so we're expecting a bit more downside to follow. Unless the buyers step in, of course, you might see a candle with a wick to the bottom and a ton of volume come in. It means the buyers have stepped in on that candle. Pretty low, pretty weak, probably back up to the VPOC again. And up onto what seems to be a very slow chart. You know, that's what we're seeing up there at the moment. Similar sort of picture, you know, you had and again, from a comparative point of view, you look at these two volume bars, that delivered that, and that one delivered that. So what does that tell you? Well, it tells you it's a market that's pretty tired. The sellers are taking control. There's probably a lot of people in there making money, and now they're cashing in, getting out of the market. So there's heavy selling in here, along with the big operators who are seeing that weakness come into the market. And really, that's all it's about. Simple comparison between two candles, two volume bars, which are almost identical. And that's why you're seeing a pullback. And that's the power of using multiple time frames. There really is no other way of doing this. And it's another reason you need multiple charts. I don't know what's happening with the Aussie yen. Is that doing anything particular? Has it come off?
Just Aussie generally?
Yeah, just the Aussie generally. Yeah, it's come off a bit. Okay.
Stop in 10 minutes, is that right?
Okay, yeah. Sorry, just see if there are any more questions. Okay, good. I hope that answered that one for you, Linton, on the VPOC, by the way. And you are allowed to go, David. It's great to have you here, and we'll see you soon. Okay, this is getting interesting down here. Let's have a look at this one on the 15. It's what I was referring to when you get to areas like this, for example. We now have a pretty strong area here of support, potential support. If it's breached, it obviously becomes resistance. That's pretty tight. It's flip-flopping around. You've got another region under here. So you've got a cluster here of two. So you know for a fact from a price-based perspective, this is a pretty decent area. You can see it over here. You know, it was flopping around here. It was also testing here as well. So this is a pretty strong area. If it breaks through that region, then that's going to be a decent ceiling of resistance in place. We've got a little low volume node here. We've got another platform coming into play immediately below it here. Another one here, less strong, and another one of this similar sort of strength here. So there's plenty of price-based potential support below this move once it breaks away from this region, and of course also breaks away from the volume point of control. Pretty weedy effort there. Look at the effort there to rally on that green candle. You know, it's pretty weak. Coming down to test the next level now. Gone back up to test it, hit it, bounced off, came down. Okay, decent volume under that one. So, you know, the market's trying to rally, pushed up, sellers have come in, overwhelmed, bang, back down again. I mean, talking a point or two, but it's you know, it's the implication of what that candle gives you in terms of the information. Okay, trying to rally again, not particularly strong volume. Price resistance overhead, and also behind it, as you can see here, we've got a decent cluster of volume here as well sitting in this region. So to drive through that, it's going to take effort, moving around all the time. This is constantly, all these indicators rebuild in real time. They are constantly building and rebuilding, assessing the price action, moving around, strengthening, weakening. It goes on in real time. It's why we call them dynamic, because that's what they do. They are building and rebuilding in real time. They're not fixed. They're not some big wedge of price that's been drawn from, you know, year dot. They are actually moving around within the area you want to have them, which is basically within the live price action itself. There's no major news as far as I know.
Yeah, there's
Nothing in the pipeline. Okay. And of course, all you need is Donald's finger on the on Twitter, and the whole market goes absolutely ballistic. What's interesting about what's forming here, you can see this is an anomaly. We've got 3 down candles, pretty much the same spread, but we've got volume falling away. So the selling pressure, there's not heavy selling pressure here. This is just selling per se. These are not widespread down candles. And as I say, the volume is falling away. What you want to see in a nice price waterfall is 2 things: widening spreads and rising volume. And if you've got that combination, then that is a perfect waterfall. And what you'd then be looking for, if you don't get into it early, is you're looking for those pullbacks and reversals. And again, that's where VPA steps in. It's so powerful because what it tells you is whether that particular reversal is a true reversal in trend from primary to primary, or whether it's a secondary reversal. In other words, a pullback against the primary trend, but it's not a full-blown reversal. And it's something we cover in detail in the Forex program on the technical analysis module. Because if you understand that principle, that one principle alone will help to keep you in a trend and maximize your profitability, irrespective of the indicators helping you in that decision making as well. Because that is the one thing that kills most traders. It's not that they can't trade, it's the fact that they can't move their trading account forward because they're quite happy taking small losses, but they can't get the big winners. And the reason they can't get the big winners is based purely on that sole fact, that they get out too early because they're frightened out with the pullbacks and reversals. It's understandable. We all suffer it to a greater or lesser extent. And it's managing that emotion, and that's what VPA does for you. It helps you to understand whether that reversal that you've banked all the money that you've made on that particular trend, and then it starts to reverse against you, and you might well be panicked out. You close out, the market then picks up and maybe develops an even stronger trend high, and you're sitting there with trader regret. That's the point at which it's so important to understand the difference between a full-blown reversal from primary to primary, or simply one that has gone from primary into a secondary and therefore is like to pick up the primary again in due course. Okay, down onto 10 minute. I haven't been down onto 10 minute yet. There we go. And what have we got on the 10 minute? We've got a perfect 2-bar reversal. Therefore, what we expect to see is some pullback from that. And if you overlay one on the other, then on a 20-minute candle, on a 20-minute time frame rather, you will have a market that's gone up and come down. And it's a very simple relationship to spot. You'll see them all the time. When you see them, be aware of them, understand what they mean. Very easy to overlay one candle on another. Okay, let me just let's go and have a look at that stock just while that's doing what it's doing. There we go. Where is it? That's Apple that we did. Actually, you'll have to give me the ticker again, Danny. Sorry. What's the ticker of that one?
KHC.
KHC. think it's KHC. Yeah, that's the one. KHC. Kraft Heinz.
Yeah, because they was going to merge them together.
Yeah, this is the weekly for Kraft Heinz. I don't know where Warren purchased or bought. I don't know how much he bought, several hundred million, whatever. And this is basically the weekly chart for it. Again, you've got lots of nice 2-bar reversals. You've got one here, you've got one here. You've got a 2-bar reversal the other way, taking the market back up. Didn't go very far on that occasion. In fact, didn't go anywhere at all. What else have we got here? You can see, for example, I mean, the amount of selling under here is colossal. This is a volatility trigger. The market didn't actually retrace, it's just carried on down. So you've got an absolute ton of selling in here. You've got more selling in here, even higher selling in here. No wonder it's gone into congestion. And bear in mind, this is a weekly chart. This is here for weeks and weeks and weeks. This is, gosh, where are we? Yeah, this is 2018. Here we are, start of 2018. This is 2019. So this is almost 2 years we've got on this chart. Markets dived again. We've now broken away from the volume point of control, which is sitting here. You can see the market trying to rally. It's these tiny little candles, you know, rising volume. Market's trying to rally on there. It's not going anywhere. You've got resistance overhead here, and you've got price-based resistance. This is nothing to do with fundamentals. It's purely technical. You've got resistance over here, very strong resistance here, which is hit, gone down. We've got volatility triggered again. Where's it going? Well, you know, next level down, who knows? It's certainly not one to buy. And the reason it's not one to buy is 2 reasons. First of all, because before you buy this particular stock, you'd want to see an extended phase of congestion building, because after a fall like this, there's no way on the planet that this stock is just going to go into a V-shaped rally and rocket up the other way to $80. So the first thing you're going to see is an extended congestion phase at some sort of level, probably $20, maybe even below that. That will go on for weeks, if not months. And at the end of that, you will have a big accumulation phase will have developed. The market makers will have moved in. They will have been able to absorb all this selling, and they will be preparing for the next phase of the rally, which will be a bullish rally, which could take years to develop. The precursor to that is a test, in other words, a test on low volume to make sure all that selling pressure has been taken out of the market, and then they'll reverse and take the market higher. That could take months and months and months. And the second thing you'll obviously see is you'll see volume as part and parcel of the buying process, which you're not seeing at the moment. There is no buying here at the moment. It's all selling. The market makers are not ready to move into that particular stock.
Right, do you want to wrap it up there, Don?
Yep.
Because it's an hour now. Yeah.
I'll just drop that one out the way. These are some of the other stocks we've written about in the last week or so, a couple of weeks. This is Apple. We wrote about that over here. We said it was looking weak, and it had this big spike, and it's now well below the price point we were talking about, 214, I think. We said it looks weak, gapped up on earnings, and then dropped, plummeted like a stone. Now it's trying to rally back to the volume point of control. This is another one. This is, oh, sorry. This is Goodyear Tires, one of our favorites. Used to trade this very, very heavily on options when we were writing covered calls, and again, very weak. There's no particular buying coming into that market right now. It's just a question of waiting, being patient. I mean, this stock has been up $20, $30, $40 odd, and it's just in a longer term decline for the time being. From a technical perspective, McDonald's, MCD, it's another one. This is another of our favorites. I think we wrote about it initially down at 194 or something. Very strong, nice stock, good volume profile, and you know, decent one too.
Decent dividends.
And decent and very, very decent dividends if you're looking at it as a dividend investment as opposed to a capital investment, or both. It's certainly a good stock to be holding right now. And what's interesting about it, it does buck the trend when we get these big falls. You know, yes, it's reflected to some extent, but certainly other stocks will sell off much more sharply than McDonald's for the time being. Got good profile. It's got good fundamentals as well, let's face it. Okay, let's go back on here. Just wrap up, see where we are. Okay, we're starting to pick up again. As I said to you at the time, you know, and this is what it's all about. This little rally down here, or this little reversal down here, you look at it and you think, oh my God, you know, I'm losing points here, hand over fist, don't know what to do, panic, hit the panic button, close out, I'm out of the market. Phew, you know, I managed to hang on to some of my profit. in an hour's time, when this is at 29.40, let's say, or 29.30, you might be living to regret that decision. And what you're seeing here was exactly what I said. You've got the market falling, but you've got it with falling volume, so it's an anomaly. Therefore, the conclusion you draw from that is that that market is not going to fall very far because there isn't any selling pressure to drive it that far. Now it's starting to recover and continue. Little change in the trend monitor, you can see it transitioned into darker blue. Trend lines diving close to the zero. This will probably transition back out at some point, and this will just be seen for what it is, which is just a transition point, a little minor pause point. In other words, this is the primary, this is the secondary. We're now moving back into primary. And of course, part and parcel of that is looking at things like the Aussie yen, the yen in particular, the yen index. What's the yen doing? Are we seeing buying or selling of the yen? And that will help you to make your decision-making process so much more comfortable.
Donald has the dollar in his sights.
Donald's got the dollar in his sights, apparently. No deep joy. We always say there's three aspects to trading. It's relational, technical, and fundamental. But actually, it's four now. You have the politics. Every single market you trade now has politics to a greater or lesser extent.
Question.
Yes.
I suppose if you get them to sell the dollars, what are they going to buy? They're going to buy some euros.
Well, yeah. If, as Anna said, if if they sell the dollar, what are they going to buy in its place? There we are. Maybe the yuan. Who knows? Some yen, maybe. There we go. So we're ticking back up now. We're back into bullish phase. We had a little pause point in the trend monitor here. We're strongly in blue here, which is very nice to see. Happily trading higher again. Not a flicker over here on the slower time frames of 5-minute or indeed the 10-minute, which you wouldn't expect anyway. And on we go. There we go, ticking higher. There we are. We're going to wrap up and run because we've run over time. I'll just answer your question, Sam. Sorry, I've just flicked it up. Thanks, Linton. Appreciate it. Glad I answered that one for you. The yellow arrows, they are the little pivot indicator. Basically, what they're looking at is they're looking at the price action over 3 candles. So, for example, here where you've got a lower low and a lower high in the middle one, either of these two, then that's your pivot low, and a pivot high is a reversal of that, where you've got this one, for example, you've got a higher high and a higher low on that case. So it's just the inverse of this one, if you will. That's the pivot indicator, used in many different ways, not just to give you signs of intraday strength and weakness over that 3-candle range, but much more importantly, it's used for help with identifying when a market is moving into a congestion phase or development of the trend. And again, it's something we cover in great detail in the Forex program. It's a little indicator that we use in lots and lots of different ways. Yeah, it's just giving you that little heads up as to potential reversals, potential weakness. In other words, that the price action has found some weakness in the market. For example, here it's gone up. This one's higher than this. A little bit of weakness, and they will be delivered in real time all the time. And this one, for example, here, a little bit of strength coming in. You've got lower lows on either side and the lower high. So we're developing a little bit of strength there. It's not a signal generator as such. It's just helpful in, first of all, identifying that, but more importantly, in helping to identify when we're moving into congestion phases, we get pivot high, pivot low, pivot high, pivot low. But that happens in real time. So from a perspective of working at the live edge, that is what's going on in terms of the pivot indicator, and that's how we use it, which is a little bit more sophisticated than just using it as an up-down indicator, if you will. Yeah. That's me done. I hope you've enjoyed today. Thank you very much for coming along and joining us today. We do appreciate it, Anna and myself, because we know you take an hour out of your time, so we try and make it as interesting as we can. If you have any questions, please just drop us an email, anna@annacooling.com or david@quantumtrading.com. We will be happy to answer them there. If you've got any questions on the indicators, just drop helpdesk@quantumtrading line, and the guys there will help you also and be able to answer them for you. Thanks very much indeed. Enjoy the rest of the trading session. Looks like it's continuing to tick up. And we will see you next week on the Forex session at 7:30 our time in London, or in Hampshire rather, where we are. So enjoy the rest of the day. Have a great weekend, and we will see you next week, and bye for now.